what I like to look for, particularly if you're a new investor, you want to find an experienced private lender who already has accumulated some money, but has also accumulated some experience. And this is like a side benefit of getting private money or having a money partner, is that they're going to look at the deal with you. And so we're all bound to make mistakes. We all do that. But if you got the person who has a vested interest, they're putting their money into your deal, also looking it over with you, you better believe they're going to point out things that make them nervous or scared. And so you're basically getting a mentor, like for whatever. And this is one reason I was willing to pay a little bit higher interest rates early in my career. I would pay 10%, to my private lenders. And it was in addition to the fact that I made profits on those deals anyway, it was worth it because their advice, their feedback, their guidance, I could run ideas by them all the time. I still do to this day. So I think that's one of the best ideas for new people who are looking to get into private lending.
Chad, thank you for joining me for our Thought Leader Spotlight series. I'm your host, Matt Camp, head of partnerships for DealMachine. On these, we really like to shine a spotlight on industry experts like yourself to really hear your inspiring stories and educate our audience on the lessons that you've learned and really how you see the world evolving. So today, really excited to welcome on Chad Coach Carson. You're a real estate investor, entrepreneur that you co-own 100 plus rentals within Clemson, the Clemson area. You're a writer, teacher, coach, author of best-selling book, Retire Early with Real Estate. I know you put out great social media content, so look up Coach Carson on YouTube as well. And then I know CoachCarson.com has your podcast, your free weekly newsletter, your courses, all of that. So really excited to have you on, Chad.
Hey, Matt, thanks a lot. It's great to be here.
Awesome. And really to kind of start, I'd love to dig in a little bit more beyond the bio I just read and hear more about kind of your life's journey and especially your real estate investing journey and kind of start there if that's okay.
Yeah, absolutely. My journey started right after college. Actually, I was a science major in college and I had a minor in German, so I had like nothing to do with business or anything like that. But I played football in college. That's how I paid my way through school, and I was just kind of worn out with that. I was like, I don't really think I want to do anything organized. I don't want to work for a big business. And I was fortunate enough to have family members. My father had some rental properties. And so I just kind of knew a little bit about it. And I pulled some books off the shelf and I just got the bug for being an entrepreneur. That just the lifestyle really appealed to me. And I didn't really know if it would be like stick long run. I thought, I'll go back to medical school or something and get a real job one of these days. But I just decided that I didn't have any college debt, which was fortunate. And I was excited about it. I learned a little bit, got to some classes. And so I jumped into the real estate investing game full-time 18 years ago, right after college. And I owned my Toyota Camry with cloth seats that I could sleep in the back seat if I needed to. So I felt like I had a cushion to fall back on. I was willing to, camp and sleep in people's spare bedrooms. And so I had a really low lifestyle. I guess that's my main point here. And I got into the game of flipping and wholesaling specifically early in my career. That was I can talk more details about that, but that was kind of my business model. And then I partnered with who's still my business partner today. And so we flipped houses together. And then over the years, we've evolved into more of a buy and hold rental business. And I just really like the active income of wholesaling and flipping. It's great, but I love the kind of continuous passive income that allows you to travel, allows you to have a lifestyle, allows you to retire early if that's what you want to do. So it's been kind of those two things have been kind of the core movements of my real estate investing business for the last 18 years.
Yeah. And one thing there too, I know, like obviously you can see the football helmet in the background, like that was a major part of your life. That was always my favorite sport growing up too. Do you think football prepared you well for this lifestyle? Like how do you think sports impacted what you do today?
Yeah, there's no doubt. I think a lot of athletes are used to kind of the pressure of just performing. You have work hard, train, self-discipline, and then you got to go perform. And entrepreneurship is very similar to that. I mean, entrepreneurship is not for everybody because there's this idea that you have to go out and perform to make money. You've got to get a lot of rejections. You got to go through a lot of just not fun stuff in order to get to the moments when it's really nice. Right. Mm-hmm. And so I think that psychology is very similar to athletics in that way. And I think that's a big part of what I at least felt like my strengths were well aligned with that. So any athletes out there or whatever, anybody who's mentally tough, I think could be a good fit. But I would say the other thing that pushed me into this was just the fact that I've been on a team, which is kind of a little bit like the military. You're always having meetings, you're always doing, just, I felt like a lot of wasted time doing all these meetings. And by the time I was done with that, I'm like, I never want to work for anybody else again. I love freedom. I love flexibility. I love doing my own thing. And I think that's the other thing about entrepreneurship. You got to have some big kind of core driver for yourself. And I think the words freedom, flexibility, independence, that always seems to come up with entrepreneurs. And it certainly was for me.
For sure. Yeah. And I think that's a subject you speak on quite often, is kind of that financial independence. And I know in your background, you said you had kind of achieved that financial independence by age 37, I believe.
Right.
But can you maybe talk through, for our audience, the playbook behind that, of how to think through financial independence? And I know you said you often hear like, well, how many rentals do I need to be financially free? Like, maybe talk through that a little bit for me.
Sure. Yeah. I mean, the easiest way to think about financial independence is like you're climbing a mountain. And so the important thing is, the peak of the mountain is maybe what we're shooting for. This is this state of financial independence where our wealth, like in real estate, your rental properties, but it could really be anything. It could be stocks, it could be real estate, it could be just money in the bank. But the point is that the wealth you've accumulated, that's what supports your lifestyle, instead of you having to actively work to generate income. Like that's the key. So that's the top of the mountain. But I think one distinction that a lot of people who talk about financial independence and financial freedom don't point out, that it's a continuum. Like you can continually get a little bit more free, a little bit more flexible, a little bit more independent. And for me, for example, it started with just being able to put food on the table. Like me flipping my first house, or wholesaling a property and making $5,000, $10,000. Me having the ability to do that, to generate income, was a form of flexibility, because I didn't depend on having to go and work for somebody else in order to generate income. And then saving the money. Like a lot of people these days are in debt. Like if you just graduated from college, you probably have a lot of student debt. And so just digging yourself out of debt is kind of like the bottom of the mountain. You're just getting yourself back to even. And that's a big deal. Like don't discount the fact that getting from the bottom of the mountain up to like the first plateau is not at the top of the mountain. Like that's a big deal. And so that's what I try to emphasize, is that just being on the path of financial independence. And there's so many different paths up that mountain. I took one route. I started with entrepreneurship. I made money. I saved some of that money, and I invested it into long-term rental properties. And we can go into some of the numbers if you like, just kind of work it backwards. Yeah. But that's the engine. Like that's my path, was starting with entrepreneurship. But there's some people who work a full-time job and they make pretty good money with that, and they spend all their time doing that, and them just saving a big chunk of their money, 25%, 30%, 50%, if you really want to be aggressive. If you just save your money and set that money aside, that's another path. So I guess there's my 2 points here are, wherever you find yourself on that continuum, just find your path and find where you are and be okay with that. If you're in debt, that's, lots of people have started there. If you've already accumulated a lot of money, okay, you're at a different point of the mountain. And then just don't be, you listen to my path, listen to other people, but you got to find your own way. Like there's not one best path. There's some best principles. There's some ideas that you can borrow, but you really got to put your own gear together. You got to climb that mountain yourself, and you just have guides who kind of help you get up there.
Yeah. And I think, like you said, there's your own path to financial freedom broadly, but then even within real estate investing, I know you talk often on hey, there are a ton of different strategies and different paths you can take once you decide hey, yeah, I want to get into real estate, want to make that my focus. Right. Can you maybe talk about that, how to think through for newbies, what the ideal strategy is, and, how do you kind of come to that decision on, you've got, wholesaling or house hacking, or, you've got so many different ways to go. Can you talk through how to think through that well?
Yeah. I start with your personal finances. So real estate does have so many different strategies that it can be overwhelming. And so my first question to everybody is what do you need from money right now? And what I mean by that is, do you need cash right now? Are you in the position where you're not making enough money from your job? Or maybe you're just like me, I didn't make any money from any job. So if you need to generate income today, that's going to put you in a separate kind of category of real estate, where you're going to need to either, wholesale, flip, or maybe even just work within the industry of real estate, get a real estate license, be a property manager, be a leasing manager. So there's all sorts of different things, a lot of them based on what you're interested in and maybe what the opportunities are in your market. But that's the first question. Do you need cash today, or do you need to build wealth? And depending on which one you answer, so I already went over, like, if you need cash today, if you just need to build wealth, like let's say you're making enough money from your job, that's pretty stable, you're good there. Now the game is like, which investment strategies are going to get me up the mountain the fastest? And for a lot of people, that's just buying some rental properties. And there's several different ways to start that, but one of my favorites is house hacking. If you can figure out a way to turn your residence into a future investment or a current investment, that's really as good as it gets for a lot of reasons. So house hacking is like living in one unit and buying a duplex or a triplex or a fourplex and renting out the other 3 units. Or more commonly in a lot of suburban areas, like buying a house that has a basement apartment or a garage apartment and renting that out on Airbnb or something. The point is you're buying your residence, and you're getting an owner occupant loan, which has the lowest down payments, the best terms. They're the easiest loans to get. So you're moving into that property, but you're not just doing the same thing everybody else is doing and just buying their dream home and saying, I deserve that. I'm in my 20s or 30s. I should have a nice house. Like, we'll just put that off a little bit. If you're willing to like delay that 5, 10, 15 years, maybe you can do some house hacking where you buy a couple of rentals. Maybe if you want to be ambitious, buy 3 or 4 of them, move every few years, and you can move into them, make some money today, learn how to be a landlord, get great financing. And then when the time's right, like for me, I lived in a fourplex, and then my wife and I wanted to start a family. So we moved into a house at that point, but we kept the fourplex. We kept it. We rented it. It's now almost doubled in rent since that time. We've paid off the loan since that time. And so now that one fourplex that we started it with a small down payment is now generating thousands of dollars in income per year. And that's one way to start. Like, that's a great way to get your foot in the door to buying these rental properties that can eventually pay you, whether you have to work on them or not.
Yeah. I mean, do you think in your own personal journey, looking back on it, is there anything you would have changed in terms of your strategy and how you went through achieving financial independence like that?
Yeah, I had a lot of wasted movement in my own business. Like, so going back to the beginning, like I wholesaled properties. As 2003 was when I started. I graduated from college in 2002. So I was wholesaling, flipping. I got really good at finding deals, started getting good at figuring out how to get private money and some other ways to buy those deals. But we kind of got so good at it that we started setting goals based on what we had seen in classes. We were like, hey, somebody else is flipping 50 houses per year. Maybe I should do that too. And so in 2007, good timing, by the way, 2008, 9, and 10 was the Great Recession. We had 39 acquisitions closings that year. A lot of those were flips we did well on, but a lot of those are rental properties. Some of them at bad locations. Some of them we just didn't estimate the remodel cost well enough. And the point was, I think we got a little ahead of ourselves. I think sometimes it's kind of like running a race where you see everybody else sprinting and running, and you think you need to run too. And then you get like 2 miles into the 3-mile race, and you're like huffing and puffing, and you realize that you outran your ability to run. And I think that happens a lot, and so we hit that. And so we struggled a little bit, 2008, 9, and 10, just eating into our reserves. Like, we luckily had not spent a lot of the money we flipped and made flipping. But we had lots of properties several properties where we had an extra 10 or 20 grand we had to feed to a house that we didn't estimate in repairs. We had some negative cash flow rental properties. And so we had some good, a few bad. And I think I would have just, sometimes I got impatient. I think we all get impatient, just sticking with a plan, not trying to sprint out ahead of yourself, setting your own goals and saying, all right, what's going to work for me? Like, what's my pace here that makes sense, that doesn't overextend myself financially, that has enough cash reserves? I think that's always a good lesson for all of us.
Yeah. And I think, there's definitely a fair number of people watching today that are just starting their real estate journey, but then also a fair number that are kind of scaling up, and maybe they own a rental or two and are thinking about, going from, I know you talked about like, hey, there's the transactional need cash now to the wealth building phase, and thinking about partnering up and thinking about, long-term rentals and that kind of thing. Can you maybe talk through when it's time to make those transitions, like when it's time to be able to evolve your strategy like that?
Yeah, if you're already flipping houses, or if you're already you just have a full-time job. Like, so my criteria for getting a rental property is when you have some good financial oxygen already. Like you've already put your, like that old airplane, when you're getting on the airplane and they tell you the safety measures, you got to put your own oxygen mask on first. Like that's the idea. You don't want to get into wealth building, accumulation mode, buying rental properties until you have your own oxygen mask on. And for me, that practically means, do you have cash reserves? Like, do you have 6 months or minimum 3 months of cash reserves in your personal life so that if you didn't get any income for the next 6 months, you'd be okay? Like, that's a big deal. Like, that gives you peace of mind. That lets you sleep at night. So that's one. Like, I personally think not having any personal debt, is another one. Like, pay that personal debt off. And I know that's not sexy. And like, this is another one of those patience things. Like, I've had people that I've worked with in classes where, they didn't have the down payment and they had some personal debt to pay off. It took them like 12 months, 13 months of just really grinding at it, paying off debt. And that wasn't exciting. Like, there's nobody, like, there's no fanfare. Like, they couldn't put a picture on Instagram saying, look at me paying off my debt. It's not that exciting. And yet that's one of the most important things if your goal is to make it the top of the mountain. Like, there's so many people like sprinting up the mountain and saying, look at me, this is great, I'm going so fast. And my thought is like, yeah, you started 2 years ago, you bought all these properties. Are you pacing yourself? And there's making money and there's keeping the money. And people like Warren Buffett and others who've been around forever, like their most important priority is keeping the money. It's like not losing money. And so I think that's the advice there. Like, wealth building is not a get rich quickly game. Like, flipping houses is where you make some big chunks of cash, but you have to invest that money into the wealth building game if you want to last, if you want to have these long-term income streams. And that's a slow game. Like, at a minimum, 5-10 years, it's going to take that kind of time to really let those things blossom, to get some rentals stabilized, to add up that income. And 5 to 10 years in the big picture is actually not that long. If you think about, most people, it takes 30, 40 years to retire. But if you really work at it, if you invest your money, you save your money, you invest it in rental properties, you've got your financial stability there, then things start accelerating. And, you wake up 5 or 10 years later. In my case, I like paying off some of the properties. You debt snowball some of your debt, you get a few of those things paid off. You can be in a really nice, stable place where you can do whatever you want. You can do what matters. That's my theme on my channel. And what I talk about is that then you have this problem that you're almost like you're 18 years old again and saying, like, what am I going to do with my life? Like, I've got income coming in. Yeah. I'm pretty stable. Like, what do I want to do now? And that's kind of a fun problem to have.
Love that. Yeah. I know you touched on, like, obviously there are a lot of different investing strategies here that could get you to that point. One thing I really want to ask you about is kind of creative financing behind that. And you said like, oh, I like to pay off my debts and that kind of thing. When it comes to creative financing broadly, one, I know you have a brand new course coming out, right? That just launched today, the day we're recording this, correct?
Yeah, that's correct. Yeah, exactly. Thanks. Yeah.
Yeah. So can you talk about, well, one to begin with too, can you talk about that course and like why you're passionate about teaching people on this subject too, as well?
Yeah. Creative financing, just for those who hadn't heard of it, is the idea that you have this financing toolbox. Like, just think about like you're a carpenter building a house, and most people use like the hammer and maybe like the saw. Like, that's your traditional financing. You go and you get a bank loan, or you go and get a commercial loan at the bank. And there's nothing wrong with those. Like, that's great. But it really is a limited toolbox. And if you want to expand your ability to buy more properties really in any market, like I found this out particularly in 2008, 9, and 10, when banks pulled back their loans. Like, you think the banks love you today? Like, wait till 2008, 9, and 10. They're like, you're like a, something from like a Halloween movie or something. Like, no. Like, get away from me. You're a real estate investor. I do not want any of your loans. And that's the issue is that if you're playing the long game, you want to have a lot of tools. And so creative financing and the course I put together is really just about how do you expand that toolbox to start using things like private money loans, seller financing, lease options, buying subject to the mortgage, wraparound financing. So there's a lot of variations of those in between. But if it takes some knowledge gap. There's a knowledge gap. Most people don't use those. It's not as common as the traditional financing, because it's easy to walk into the bank and say, and hey, what are your terms? What are your rates? Will you make me a loan? It takes a little bit more knowledge building, and it takes some practice to build up your creative financing toolbox. And you have to build relationships with people. So that's the cost of entry to do that. But once you get in, once you know how to do that, the sky's the limit. Like you have an unlimited ability to do as many deals as you want, to customize the terms, the interest rate, the length of the loan, the risk, whether you're personally liable for a loan or not. Like there's a laundry list of things that you can then be in the negotiation for all those things. And so you have an unlimited amount of loans, you can negotiate all the terms, and you also have this business that you built where you work with a small group of people and you continually benefit one another. Like I have a private lender who's loaned me money for almost 18 years now, was one of my first people who loaned me money. And we've had conversations recently. He's almost 80 years old. And he says, your loans that you've paid me at 6% interest for the last many years, pay my grocery bill, help me pay our insurance, in our retirement. Like you're basically paying for my retirement. And that's such a good feeling, knowing that we are benefiting individuals, we're benefiting each other. This is a win-win. And so I like to put that forward, because the traditional way of doing it, there's nothing wrong with it. You can get low interest rates, 30-year fixed financing, but it takes, with a little bit more effort, it opens up another world of possibility and actually fun and fulfillment as well.
That's awesome. Yeah. Do you, at the risk of, we don't have to go way down the rabbit hole on each of these, but I know you outline it's like 8 to 10 or so different tools in that toolbox. Could you maybe give just a kind of a brief overview, kind of defining each of those things and how a newbie should think about it, or what situations they might be using each of those tools in?
Yeah, I mean, probably the one that I use the most is private money. So private money loans, and maybe 2 different variations. One is I go to an individual who just happens to have a lot of money. And just a little tip for everybody here: where do you find these individuals? Most of these individuals have been other real estate investors. So I find people at a local real estate meetup. I find people at, networking online. Like these are the people who already like real estate. But what you'll find is that there's a lot of people, a lot of money out there from people who don't want to go find the deals and do all the effort that you're doing to go find the deals. They're not using DealMachine. They're not going out and door knocking. They're not doing all this stuff. And so if you can find the deals and you can provide them a reasonable interest rate, or reasonable return, like those people are out there. There's tons of them. There's more money than deals. I should repeat that. Like there is more money in this world than there are deals. And so if you can get good at finding deals, then put in the effort and to find these private money lenders, then it's unlimited. It really is. And so private money, there's these individual real estate investors, but then also there's this other kind of scheme or section of the real estate investors who have self-directed retirement accounts, for example. And that's opened up a whole nother world. That's a very particular niche of private lending. But just think about how many people have retirement accounts, 401ks, and how many of them don't realize that they can self-direct at least a portion of those and loan you that money. And so a lot of that money is just sitting in CDs or bonds, or some people have it in the stock market and don't want it all in the stock market. There's so much money out there that if you can teach people that they didn't even realize they could self-direct that and loan you the money, I mean, that's another untapped source. And so I've done a lot of the individual investors, done a lot of the self-directed IRA, teaching people that they could do that, hold their hand, show them how to do it. And so those are kind of 2 core tools that I think, probably over half of my creative financing has been in those categories. Yeah. But then beyond that, one of my favorites is doing a similar approach, but working with sellers. So when you're out negotiating to buy properties, don't just make an all cash offer. If you can also offer them a seller financing proposal or a lease option proposal, or maybe something else creative. This is all about negotiating and listening to the seller. And this is where it takes a little bit extra level of knowledge of understanding tax implications, understanding what would happen if they sold it, and asking them questions like, what are you going to do with the money after you sell the property? If you can start getting these kind of conversations, then you open your toolbox and you say, what about this? What if we leased the property from you and gave you that price you're looking for? You're looking for this $250,000 price, which I might not be able to pay if I just paid cash for it. But what if you gave me an option for the next 2 years? I'll pay you rent. You won't have to deal with any tenants for the next 2 years. And then if 2 years from now, I'm able to get the financing and do what I need to do, I'll buy it from you for that price. If not, you can keep my option deposit that I just gave you. That would be like very brief. I mean, there's more we could talk about negotiation wise, but that's a lease option offer. I can do the same thing with seller financing. And I found that when I give those multiple offers, it opens up all these discussions that people aren't getting into, and they open up possibilities for you as an investor, but also they could be very helpful for a lot of sellers out there.
Yeah. I know you get into kind of the paperwork behind each of those as well, right? Like, can you kind of explain why that's so important to be able to have that lined up, and like what forms do newbies need to be thinking about right away, like that type of stuff?
Yeah. So most sellers, like I don't lead with the seller financing vocabulary. Like a lot of people are just getting into creative financing. They're like, "Hey, would you seller finance it to me?" And people are gonna be like, "No, like I will not." But so you've got to you got to know that from the negotiation standpoint, you've got to explain the benefits of the technical part, the paperwork and all that. You got to explain it from the seller's point of view. For example, I'm going to take care of this property. I'm going to do everything. I'm going to manage it. And every first of the month, you're going to get a check for $1,000 from me. And that's it. And so that's the value proposition. But then of course, like if they say, I'm interested in that, then let's talk about the paperwork. Let's talk about the details. And this is where your knowledge comes in again. You have to study it yourself. You got to have some of that paperwork ready to do an addendum to a contract to say, what is the interest rate going to be? What's the down payment going to be? What are the terms of this owner financing? And then you're going to also need to have a local attorney. And so like, I'm not trying to be a replacement for a local attorney. This is a team member that I have on my team. But when we can take a course, or you can learn about how those terms work, how the paperwork works, you can start there, and you can be fluent enough to have a conversation with your local attorney. And you can say, hey, here's the seller financing note that I found. This is a template I found from another investor. Can we tweak that to make sure it meets my local laws in my state or wherever I am? And not every attorney understands this stuff, by the way. Like you got to find like these more creative or more commercial oriented type attorneys. But when you can do that, you basically got that paperwork ready so that when that seller says, yeah, that sounds good, like what's next? You can then do your normal contract, but have an addendum. And then you can say, here's a blank copy of the promissory note and the mortgage or the deed of trust that we're going to use. And I have an attorney who is very familiar with that. If it's up to you, but we could use them to prepare that paperwork and do the closing. And so like all that, like in the conversations I have with sellers, that usually goes very smoothly once they say yes, but that takes practice and that takes some knowledge, and that A to B to C getting to closing. It takes that competence and that understanding of those details in order to kind of drive that ship, get it there. Yep. And then at closing, everybody's happy at that point. But that's, if you were just fumbling along with some of that, you can lose a deal because you didn't have that paperwork and everything lined up.
Yeah. And I think it goes a long way just building trust with them in general. They know that you know what you're doing, and that, it's especially if it's a creative route, like coming prepared like that is going to, build them the trust to say, hey, let's follow through with that particular, more creative solution. So
exactly.
Yeah. Do you think on the, in terms of partnerships in general as well, I know you talked about saying like, hey, there's more money than deals out there. For newbies approaching other people who they know are interested in real estate, they are excited to be able to have you deploy their money into finding those deals. Are there any common pitfalls or anything that you see that newbies need to have in mind right away when they're pitching for private money like this, and make sure things go smoothly down the road as well for years to come?
Yeah, there's a couple that come to mind. And one of them is you need to distinguish like the types of people who are interested in loaning you money. Yeah, you're going to find some people who are probably should not be loaning you any money. Like this, their last dollar, they're kind of just trying to shoot for the stars. They're trying to, they've lost some money on other deals and now they're trying to make it up with you. And you just don't really want to be that kind of savior investor for anybody. Like that's not a good arrangement. You want to let them kind of, they need to do something else. This is probably not the right deal to do with you. What I like to look for, particularly if you're a new investor, you want to find an experienced private lender who already has accumulated some money, but has also accumulated some experience. And this is like a side benefit of getting private money or having a money partner, is that they're going to look at the deal with you. And so we're all bound to make mistakes. We all do that. But if you got the person who has a vested interest, they're putting their money into your deal, also looking it over with you, you better believe they're going to point out things that make them nervous or scared. And so you're basically getting a mentor, like for whatever. And this is one reason I was willing to pay a little bit higher interest rates early in my career. I would pay 10%, to my private lenders. And it was in addition to the fact that I made profits on those deals anyway, it was worth it because their advice, their feedback, their guidance, I could run ideas by them all the time. I still do to this day. So I think that's one of the best ideas for new people who are looking to get into private lending. Keep that idea of you're not only getting the money, you're also getting a mentor. And so is this somebody you trust? Is this somebody you want to work with? if you have any red flags with somebody, like I know they're giving you money, but like, remember, there's more deals than there is money. Like if somebody seems like a scammer, or at least even if they're just a hardball, they're just like, oh, they're going to take advantage of you as soon as you turn your back. Like, don't do it. Like, don't do business with people who you wouldn't do business with for the next 20 years, who you trust. Like, trust is everything. There's a great book by Stephen Covey's son. The guy who wrote 7 Habits. His son wrote a book called The Speed of Trust. And it's just talking about how you can get all the contracts you want. You can try to cover all your, cover everything, but it all comes down to trust. Like if you trust somebody, things work quickly. Like they go so fast. You don't have to watch every single thing that person does. And so build your entire business around people you trust. And you're not going to be perfect. You're not going to bat 1,000, but if you do that, if you say, look, first and foremost, do I trust this person? Do I like working with them? Then do they have the money to loan me? I think that order of operations is an important one.
Love that. Great book as well. Yeah. Well, this has been awesome. Before we go, I do want to ask about like you talked about, do what matters, that your philosophy behind that and how to approach that subject, because I do know there are people watching this as well that have gone down this journey. They are probably at that point in their life where they are thinking about what's next for them. What would you say to those people? Like, how can you help them think through how to do what matters next?
Yeah. So this is an ongoing struggle for myself as well. So we all like kind of are there. And so as I say this, don't think I'm like preaching for something I'm perfect at, but I have found that, money's great, but like and it's not the most important thing, but it's also not unimportant. Right. And so I wrote this thing called the Money Life Manifesto on my website a while back. And it really just tried to distinguish that let's try to find that happy place where you're putting some emphasis on money, like you're investing, you're flipping, you're starting your own business. That's great, right? This is what we're here to do. This is what we're here to learn. But we also have the equal problem. The other side of that is that we can grind on for years, always moving the goalposts, always saying, hey, when I get this much money, then I'll be ready. Or when I get this much money, then I'll take it off, some time off. And that's it might be more than just Americans, but it's a very American concept. Like we get into that grind. And so I challenge all of us to think about what matters to you. Like, what is it? Like and I've done exercises like this over the years that have been really helpful. Like make a list. Like what are the things, what are the people, what are the activities? How would you spend your time if money were no object? And really dig into that, really think about it. And what I found in my life is that when I write those things down, money does play a role in those. Like, for example, my wife and I wanted to travel with our kids to Ecuador, and we went there for 17 months. We lived there. Like, you had to have some money to do that. But what we found was like money was not the number one obstacle. Like that was just an amount of money. Like we just needed to have some income coming in. We needed to save up the money. Like that could be solved. The more difficult part was psychologically like detaching ourselves from some of these habits that I got to do that. I got to do that. And the insecurities and the fact that like, what am I going to do if I don't identify with my job? Like I'm a dentist, I'm a mechanic, I'm a this or that. Right. And so it's sort of an inner journey as well to go into financial independence. And it's a little bit scary, but it's also exciting. And I mentioned earlier, like it's almost like you're a kid again, and you haven't figured out what you're going to do when you grow up. It's a continual process of asking yourself that. And then asking the second question is, how does money play into that relationship? And money's not the master, money is the servant. Your life, doing what matters, what's important to you, that's important. That's the most important thing. And if we keep those roles like in their proper order, then things tend to be better. You tend to be more fulfilled. You tend to have better relationships. You tend to not just go on for 20 years at some path in your career just because you're going to make more money and get kind of a vanity metric of I make more money than they do. Like, that's cool. That works for a little bit, but it's not going to make you happy in the end. And so I think that's really what this is all about. This is about you personally finding the place where you're doing better than you did before. You're spending more time on what matters to you. And for whatever amount of time you're on this earth, we can't guarantee that you're doing your best and using money as a tool to help you do that.
Yeah, I love that, Chad. Yeah, I think that's a great message to leave people with. So I really, really, again, appreciate your time. Appreciate you bringing your knowledge to this. Where can people best get in touch with you? And I will also link to the new course that you're putting out on the creative financing side, because I know that outlines all those tools. It gives paperwork. Fantastic resource for our community there. But where else can people get in touch with you as well?
Yeah, well, thanks for having me on, first of all, Matt. And if people
Yeah.
want to stay in touch, all of my podcasts, my blog articles, things like that are at coachcarson.com. So that's a great place to connect with me there. I also have a free weekly newsletter and a toolkit that I give everybody when they subscribe to that has a lot of my forms and paperwork that I use in my business, like a closing checklist, a deal worksheet, things like that. So definitely check me out at coachcarson.com. And if you're watching on YouTube, I'm spending a lot of time every week. I have a new tutorial video, kind of helpful. How do you do something? How do you run the numbers? How do you do creative financing? So check out you just look up Coach Carson on YouTube, and I have a Friday video, and then I have my podcast every Monday on YouTube as well. So I would love to connect with any of you there. Leave me a comment, say hello, and would enjoy connecting with you.
Perfect. Well, thanks again, Chad. Really appreciate the time, and I enjoyed the conversation.
Yeah, thanks a lot. I enjoyed it too, Matt.
Yeah, to everyone watching, this is Matt Camp with DealMachine, and happy deal finding.